Nvidia bulls are still trying to make sense of its $20 billion surprise deal for AI chip player GROQ. Nvidia didn't even put out an SEC filing on this one. Go figure. It also hasn't said anything publicly about this deal. The only one who has had something to say is the likely much wealthier GROQ founder, Jonathan Ross. Ross pointed out on his LinkedIn over the weekend, clearly he's jazzed about this. He will be joining Nvidia as chief software architect. Big role for Jonathan there, for sure. While this deal gets digested by Nvidia, investors are also wondering how any slip-ups by the company in 2026 will be received, and what is the outlook more broadly for large-cap tech stocks after another strong year in 2025. Chris Versace is Tematica Research's chief investment officer. Chris, got to get your thoughts on Nvidia. I find it funny. You and I are, I think, fundamental analysis at heart, and I'm surprised there was no filing on this deal. You spent $20 billion. And you don't even get a filing.
Biggest acquisition they've ever done, Brian, no filing, and they sneak it through on Christmas Eve. I agree with you. It's a bit of a head scratcher, especially when you take a look at the multiple that they're seem to be paying. But we've seen other big multiples of late. ServiceNow picking up Armis, $7.75 billion on $340 billion in revenue. And, I think this is a larger trend that we've seen really over the last year, Brian, where these large cap companies are flexing their balance sheets, filling in technical gaps or holes, kind of as a competitive move so they can compete on a greater scale in 2026.
Chris, I remember being in the Streets offices when I worked there, and you may have been there too as well. Maybe 2017, and the Streets founder, Jim Cramer, always would come in very bullish on Nvidia. He was one of the first people that I know championing a bull case on Nvidia. And his case was Nvidia essentially dominates the chip market. At the time they were doing gaming, but now they're also, of course, the main leader in AI. Do you think this acquisition signals that they are concerned that GROQ was working on something that they didn't have in their pipeline?
So I think it's more of an effort of them to shore up their inference strength, Brian. Again, taking a very strong competitive position, extending it further as we move deeper into AI, moving past simple training into figuring out what is next, making their models that much sharper. And I think we're going to see more of this. You know as well as I that there's never one company making a sole move. There's always what we like to call the competitive response. So what is AMD going to do? What is, Broadcom going to do? What is Marvell going to do, and others? And I think, if you step back too on this, it's another signal that we're likely to see the M&A strength we saw in, the current quarter continue into the new year. And if you're a shareholder of, Morgan Stanley, JP Morgan, Goldman Sachs, you're going to feel pretty good about that.
Chris, I just had a story hit our website on I like the headline. I wrote it. It's fine. Amazon stock might rise 50% next year, and it would be a big number. But I think lost in the sauce here. This stock is only up 6% this year, despite some decent financial results. But the main concerns being slowing growth for AWS, and if it is a real AI stock play. Do you view Amazon as a real AI stock play? Because I think changing the thesis on how they will contribute to AI is important to get this stock working.
So it's kind of an interesting, company, right? So on the one hand, people are like, oh, it's a retail company. Look what they do in digital shopping. On the other hand, they're a cloud company, given what they had with AWS. And even more recently, Brian, people have been saying, oh, Amazon, sleeper company in digital advertising. Look what they're doing to the trade desk. And I think when you step back, you really have to ask yourself, where does Amazon really make their money? That is, of course, AWS. It's the biggest driver of their cash flow as well. And as it becomes larger, it really helps kind of balance out the seasonality that we've seen in the past from the retail-facing business. But to your question on AI, I think they're going to use it to help drive productivity inside of AWS, help improve cash flow prospects, improve their margins. The real question to me is how can they really leverage it on the digital shopping side? And some of the early data that we've seen about Rufus, where folks are actually buying more when they use Rufus, that's a pretty positive play, data set for us to think about. But as far as Amazon being an AI company, we're going to need to see more of them selling their wares outside. So we're going to have to watch what they do on the chip front, I think, for that to really take hold.
Chris, just listening to your explanation of Amazon, I mean, you're spot on. I can't help but to think, does the business model, has it gotten so complex? Do we need to bring back into discussion if this company should break up? Look at some of the things we just talked about. They have an e-commerce business, AWS Cloud. You have a chips business in Tranium. They're making robots. They have advertising revenue and probably 10 other businesses I'm not even mentioning here.
Yeah, I don't think so, Brian. I'm sure you'll get some folks out there, particularly some congressional people in the state of Massachusetts that might say, oh, this is too big, we've got to do something here. But personally, I don't see it. I think if we were to see one business, really dominate the overall revenue mix, then I think that would be the case. But I think when you step back too, and you look at the larger industries that they compete in, there's still much room to grow and a lot of room for other competitors. So I just don't see that.
Chris, in the 45 seconds we have left, make your case for your favorite tech stock for next year.
My favorite tech stock for next year? Oh, I would go with Marvell, Brian. And the reason being is, a lot of folks are focusing on the chip business at Marvell and what they're doing with the third-party AI wins, whether it's with, Microsoft, Meta, or even Alphabet and Amazon as well. But I would step back and say that if we continue to see AI adoption and usage grow, like we talked about in the earlier segment, we're going to see network congestion. As that happens, we're going to see incremental capacity come on stream. That helps explain the big spending on AI and data centers, but it's the network connection that will be the big bottleneck that I think folks are missing. Good for Marvell and the other stock that I mentioned earlier, Arista Networks.
Great insight as always, Chris. Happy New Year to you. I will be talking to you very soon. Appreciate it, man.
Same to you, my friend.
Thank you.